introduce you guys to Mark Pierre Lewis. So most people know me as a serial entrepreneur. He's a serial investor. Definitely, very inspired by him. I follow his investing page, which is where I get a lot of my investment tips. Most people know that, I have a little bit over $1 million in the stock market, but how I accumulated a lot of my money is by way of using a financial advisor. And so wanted to bring somebody in that could really talk to you guys about the beginning stages of investing and what it is that we look for, how to get started, excuse me, how to know if a stock is a good stock or not, how to know when to buy, when to sell, all of those good things that are really important, especially, the beginning of COVID. I kept telling everybody, dump as much money as you can into the stock market if you're continuing to make money, because this is a man-made recession. And so, we're still going to see, some growth, in the stock market. And we probably saw much more than I even expected, myself. So I'm going to turn the floor over to Mark and let him take over, and we'll kind of go from there. So I'm going to go ahead and mute mine, Mark, and let you have the floor, okay?
Okay, appreciate it.
All right.
All right. Hello, how you doing? To you all, my name is Mark Pierre Lewis. Just to kind of give you a little background on me, myself, I'm a nurse practitioner. I'm predominantly in the medical field, but over time I realized that it's not just about being in a particular field. You really have to self-teach yourself your own financial literacy. No one, propels yourself but yourself. So it's not taught in high school. It's not taught in college. It's not taught when you get your first job. This is something that is in a self-enrichment process. So as I started to evolve and, use medicine's income to really kind of diversify my portfolio, I realized that investing in the stock market was a key component of my, wealth progress. So over time, I've started in the stock market in 2007. I would, consider myself novice at that time. Now over, several years of experience and learning and, going through ups and downs in the stock market, I would say that I'm in a position now to really influence others to consider investing early, because really time is something that is, you can't get it back. It's invaluable. Time is something that even the richest person wish that they can, be able to purchase, and you just can't get it time. So over time, investing early just compounds those gains and really puts yourself in a position to where you can consider yourself wealthy. In regards to obtaining your wealth, we'll talk about certain things that, would put you in a position to really benefit financially. One of those things is considering a financial advisor. As Snoop alluded to, as she's evolved, she's put a great team around her, and you have to be able to acknowledge, your own areas of deficiency, and seeking a financial advisor to kind of help those areas that typically are considered weaknesses in the Black African, American community. We get those, we get that opportunity to strengthen it. I was able to meet my first financial advisor in 2007 as part of my employment in the ER. Edward Jones came out, and they, really kind of captivated me. I took the man's card, I called him, and since then I've been investing since. And it's changed my perspective on life, because now I'm able to actually use my income and actually stretch it, which is something that we're just historically not even, ever taught. So investing in the stock market is a key way. I like Edward Jones. There's also Charles Schwab as another alternative. A lot of people use TD Trade as well, but they don't get that one-to-one experience. And once you get a financial advisor, you're able to actually look at your portfolio and look for areas that you can improve personally. One is having a Roth IRA. I'm not sure if anyone here has a Roth IRA or familiar with what a Roth IRA is. Any concerns about what the Roth IRA is, or if I need to elaborate on it at all?
Yeah, let's elaborate on it, Mark.
Okay. All right. So the Roth IRA is available to you at certain income limits. So if you're a single person, let's say you're making under $100,000, you're able to participate in a Roth IRA. After you supersede $140,000, if I'm not correct, I think it's $144,000. you can no longer invest in a Roth IRA. So as you actually financially grow, it becomes harder for you to find opportunities that benefit you. So investing early when your income is low is very important as well. So that's why you have to start investing early. Because once you hit those income limits, it becomes harder for people like Snoop and I to look for opportunity that hedge against inflation and also getting taxed. So you can use that as a area to really kind of reduce your taxable income, because a Roth IRA is money that you pay taxes on that you actually invest in. You could build, a diversified portfolio where you can get mutual funds with multiple stocks in it, and you invest in it, and over time, you can take that income out at 59.5 tax-free of all the profit. So if you invested $100,000 and now that portfolio is worth $300,000, that whole $300,000 is yours tax-free, and you can take it out at 59.5. Now, if you decide that you want to take it prematurely, you've already paid taxes on it, so the taxable income is still very small. It's very nominal. So it's an alternative to just a 401k. Because when you get a 401k, you pay no taxes in it at all, but you're limited to, removing yourself and making disbursements at the age of 65. That's the minimum. So the Roth is just an alternative towards someone who's 59, who no longer wants to work, who's in a good financial position. If you have money in a Roth IRA, you can start taking disbursements until you're 62, 65, until you can fully retire. So it's just an alternative. And I recommend Edward Jones. They're a great platform. They'll look at, your risk profile. So if you're conservative, they'll make sure that your profile, reflects a conservative module. So one thing that you can do is bonds is another thing that you can do inside your portfolio. They're really, really nominal profits, but the risk is very, very, is very conservative in regards to risk. So it really, really contains risk. So these are some options that you can do, but the first step really is getting a strong team around you, and that includes a financial advisor to guide you over time. Now, next topic I'd like to discuss is, different platforms for you to consider investing in. Robinhood, I like Robinhood. I use the platform. It's free. They don't charge any commission. TD Ameritrade is also a great alternative as well. There's some other apps as well, as called Webull. It's an app that allows you to trade, because the stock market actually opens up at 9:30 in the morning and closes at 4:30 p.m. So anyone that would like to trade after hours, what we call pre-market and aftermarket, can use Webull. It's an app that you can trade all the way up until 9 p.m. At night, and you start trading at 4 o'clock in the morning as well. So you can take advantage of some loopholes in the stock market as well. And I kind of deterred a little bit, but I just want to kind of stay on track. The reason why I recommend investing in the stock market is time is your friend. When you, for example, take a stock, when you look at it historically, a stock like Apple has returned 32% annual returns. Even when it's down annually, it's returned, investors 32% on an annual basis over, 10, 20 years. So if you, let's say, have $1,000 that you're able to commit to on a monthly basis, and you do that for 10 years, $1,000, 12 months, that's 12,000. You do it for 10 years, $120,000. If you would have just invested in Apple and you had an annual return of 32%, that would be worth $24 million if you're able to really have the patience. So patience is very key. The stock market is a tool for transferring money from the impatient to those that are patient. So when big hedge fund managers look at a stock like Snap that we use, that was kind of a well-known stock 2-3 years ago, it came out on the market. This stock was at $15 a share. It was a little turbulent when it first came out, went down to $7 a share. Big hedge fund managers, they're buying this in multiple shares. They're buying millions of shares of this stock because they have patience. They're sitting in a boardroom saying, we like this stock, we like this, we like what they're doing, we like their business model, we think they'll be profitable. And this stock recently hit a 52-week high of $75 a single share. Could you imagine 1 million shares quantified when you first purchased it at $7 a share to now $75? It's a lot of money that they're making because they understand the value of time. And we historically, where we think more short term, we don't think long term. And we have to subconsciously break those barriers of just, having liabilities and really having an asset that actually pays for those liabilities. So if you own Apple, they pay dividends quarterly. So every 4 months you'll get dividends. So let's say the stock's at $120 and it doesn't do anything at all year. You make no profit. It doesn't go up. You're still going to get money on dividends. So it's still very conservative. It's what we call a value and income stock. It's a stock that gives you income from dividends and also has the risk of value going up. Meaning if the business model grows and the stock goes from 130 to 140, you've added money and you made more profit, but simultaneously still collected dividends. And then there's other stocks such as growth stocks. These are the young ones that we're talking about, like Snap, Facebook. They haven't been around very long. They don't pay dividends yet. A company like Apple, a company like Costco, a company like Home Depot, they've been around for decades. So you have the value and income. Growth stocks are really, really just there for growth. They're purely just taking money, reinvesting, and growing the brand. And you can share in that, but you really have to get in early and you have to be patient. So it's not a stock that I would recommend you buy for 6 months. If you're gonna buy Apple, buy it right now and just wait 2 years. I guarantee it'll be 2 times, 3 times, more growth, because the business model only does this, but the intraday volatility does this. The stock goes up, it goes down, but historically it only goes up. So we talked about growth and income. We talked about regular growth stocks. There's also bonds, which we talked about. I have some bonds as well. There's some people that all they do is buy bonds, and some bonds pay you monthly, tax-free. Even if you're making $1, $2 a month, it's still, free money to hedge against inflation. So if you have $1 today and you go to Walmart, what you could buy for $1 is no longer going to be the case 5 years from now. So you as an individual, you have to become financially literate to know that your job is to hustle, is to figure out how to invest so that you hedge against inflation. And if you develop that concept, you'll just see the opportunities because you're assessing it. These are things you could talk, to people at home, your friends, you watch your children's behavior. My kids, they love Apple. That's a good indicator to me that Apple's a great stock to be in. And right now, Apple's down by a lot. This stock went from $140 a share, $145 a share to $120 today. There's no reason for Apple to being down right now. There's absolutely no external factor that changed the business model. So this is just a buying opportunity to get in at what we call an entry point, to where you feel comfortable that you're getting in at the lowest point. And what you have to do now is just hold it and let it just do its job. Now, Snoop, did you want to chime in at all? If there's anything at all that you want me to kind of go in terms of direction, I can certainly go in that route as well.
Yes. Let's talk a little bit about how you pick stocks, how you look at the various companies, how you know if a good stock is a bad stock, when to sell, when to buy, things of that nature.
Okay. Some stocks, really honestly, you really have to just try to get 10 stocks that you like, that you're really good at, and that what you're doing, you're studying the history of the stock. You go into Walmart. I look at Walmart as a business. I go into Apple, I go into Starbucks, I look at it as a business. So if you start looking at things as a business, are you in and out of these stores? Are these fan favorites? Does a young crowd like it? Sometimes that's a good indication. Other indicators would be new revolutionary technology. For example, Tesla. It's undervalued right now. Just outside looking in, I could tell you global warming is telling me that there's something wrong with our planet, that we have to move towards better alternative to just gas and oil. And I think Elon Musk is in a really, really, really great situation to, one, be the industry leader in trying to revolutionize the industry and also save the planet simultaneously. So some of these things are really just visible. There's another app called Discord app. There's a lot of Instagram companies that have a Discord app link. And what we do is they share information on that link, young investors, about stocks that are moving, stocks that are going up, going down, and they watch it and they share that information, and people are connecting and benefiting from that. I also watch MSNBC, Jim Cramer. I haven't missed, I think, a day in a very long time. It's just me doing my due diligence, taking the time out of the day to just enrich myself and think a little differently. Jim Cramer is a wealth of knowledge. He'll tell you why he believes in the business. He analyzes it, and then you do your own self-analyzation as well. There's another app that I like. It's called Seeking Alpha. It's an orange tab. It's called Seeking Alpha. It's a network of investors like you and I. And what we do is we actually just debate about why we think this stock is worth it, why we think this stock has risk, why we think this, is a good one. This, we kind of go back and forth, and that is what we call the debate of bears and bulls. So a bull thinks that the stock is worth way more and that it's only going up. The bear's mindset is, this is a good stock, but these are the threats to the stock, and this is why we think that the stock has ran too much, or the business model has failed, and we think that this stock's price is way overvalued, so we'll short the stock, meaning they'll take a bet against the stock going down. And that's what happened with GameStop. A lot of the big hedge fund managers were putting billions of dollars keeping the keeping the stock undervalued. Rightfully so, because no one's going in and out of GameStop, especially with COVID crisis. So the stock got shorted. On the Discord app, a lot of the young people on Reddit started they got the short list. They identified what companies were shorting certain stocks. So what they did is they mutinized together and they moved money into that stock, causing the stock to rally up as opposed to rallying down. So big hedge fund managers lost billions of dollars because historically, we don't have access to that knowledge. We don't know when they're shorting a stock. Most of the time, they'll run Apple up and then they'll short it. Once their money is made, they'll sell it and then they'll bring it right back down, and on the way down, they make money and then they run it right back up. But fundamentally, there's nothing wrong with the stock. That's what we call day traders. That's what they do. They make money every single day. But if you look at it historically, the stock has only gone up. You could just tap in Apple on your watch list or Tesla and look at the history. Every time it's taken a dip, it's really a rare buying opportunity for it historically only going one way, which is up, because it's still a young industry. Tesla also has a what they call FSD, full self-driving software, that now I think is also going to revolutionize the industry. So what they're going to do is actually license that software to other companies that are just not where they need to be at in terms of EV or electric, vehicles. So that's just another tenet on top of solar. So, some of the opportunities are really staring you at the face, and it's things that you're using on a day-to-day basis.
So at what point is it time to sell in your opinion, Mark?
Okay. Now, I think time to sell, can you put the light on real quick? I think time to sell is one, I think it's a personal assessment. I think some stocks go up, and I think when you feel like you didn't take the profit and stock goes down, you feel like you're losing opportunity. So the way I like to do it is, let's say I put $10,000 into a stock and the stock goes up. You can use your own measures, but let's say it goes up 10, 15, 20%. Let's say it goes up 20%. At 20%, if it goes from 10,000, let's just make it flat numbers to make it easy. Let's say you put $10,000 in, it goes up $1,000. What I normally would do is I would sell an equivalent of the stock to get the $1,000 profit out, but I still keep my original investment in. And they call that playing with the house's money. It's also like having a pig. You skin the pig, but you don't get too greedy. You keep skinning the pig, but your pig keeps giving you, keeps bearing fruit by keeping your investment in. And that's really for long-term investment, investments like Tesla, Apple, If Apple goes up $1,000, I'll share $1,000, worth of Apple, and then I'll wait for a bottom. Now we'll just have that cash as reserve in case an opportunity comes in for me to pick it up at even a lower price.
And what are your thoughts on Forex and cryptocurrencies?
Forex, I haven't dived into Forex. I think cryptocurrency is here to stay. I think that it's just like Tesla. It's young, it's innovative. I think it's going to change the world. I think this blockchain, there's just so many layers to it. There's the blockchain, then you have the Ethereum, which is the actual data that actually provides structure and a blueprint for the information that the blockchain actually holds. So there's two ways to play it. And I think that those investors, I think right now it's a little too high. I would wait for Bitcoin to maybe come down. It may, and the thing is, I don't know if it's going to come down because Elon Musk, once he's involved, what he says, what he tweets really has an impact on the market. So it was recently at 21,000, it went up to 25,000 and to 28,000, and Elon Musk, one tweet and Bitcoin jumped to 51,000. So I think it's going to come down. I think the way that we're printing money right now, we're devaluing the American dollar. I think at some point currency is going to lose its value, and I think Bitcoin may overtake it. Big banks are resisting that because right now it's a centralized system, meaning the middleman makes money. If you go buy a house, you sell a house, the bank is still involved, meaning they still make money. With Bitcoin, you eradicate the middleman. It's just data, it's just information. So, and I think it may change the way we do finance, the way we do business. So I think that you should have a small portfolio in it, maybe $500, maybe $1,000 to start. And it's kind of money that you're putting in but you're forgetting about it. You just have to wait 3, 4, 5 years for it to match rate. The same way as Snap, the same way as Apple, same way as Tesla. All these stocks, when you join in that endeavor, it's going to be so volatile. There's days that you're going to want to sell it, but historically, as you can tell, it only goes up. Bitcoin also, I think there's a couple of different platforms for you to be able to purchase it. So you want to make sure you're getting it from a secure platform. On Robinhood, you can get it as well, Bitcoin. But keep doing your research on it. I usually post on my Rich and Wise certain, because the information is very suppressed on Bitcoin. They're suppressing the information because big banks want to limit, them becoming last place in this endeavor in terms of financial transaction. So even I forgot his name, JP Morgan. Is it JP Morgan? Yeah, JP Morgan. The CEO himself was very anti-Bitcoin, but he was kind of a hypocrite because he was buying Bitcoin, but he was suppressing the fact that he was buying Bitcoin. So we think that Bitcoin is definitely going to be worth it going forward, but it's still very young in the process of changing the concept that it's important because you have resistance right now. But if it drops under 30,000, I would jump into Bitcoin. I think it's a good buy long term. I'm still getting into it. So it's kind of hard for me because for a very long time, it wasn't federally regulated, which means information can be stolen. And now they have a ledger and there's more structure and the federal government's involved, which means that you have more security that we didn't initially have before.
Yeah, I personally, because of everything going on, I think that Bitcoin is a really good investment. It's, as Mark was saying, it's really high right now. I got into it when it was about at 14,000. So I've been able to realize that growth, of it jumping up to 51,000. And so like Mark says, what I generally do with something like that, I'll sell off a lot of my earnings and kind of keep my principal, investment in there. I think one thing that's important when you're first starting off is to decide, if you're going to be a short-term investor or a long-term investor. I used to, with my portfolio, I would only look at it like once a month because most of that money that I had going into it was just for the long term. I didn't plan on touching it for 10, 15, 20 years. You've got some people that, as Mark was saying, are day traders. And so they literally sit there and they look at the market every single day. Even if they aren't day traders, you got a lot of people that are just really into it. Me, with as busy as I am, I wasn't doing that. I am doing it now just because there's just so much growth and there's so much money to make in it, especially right now. It's really important. So one of the things that kind of came with the mentorship program is all of my courses for free. And so I'm not sure how much time you guys have had to delve into those, but I have a course on there called How to Save and Invest, and it goes through the Robinhood app specifically, with all the details. It'll show you the app, how to sign up, how to read the history on stocks, how to search for various stocks. So a lot of information for the beginning investor. Once you actually have a portfolio, how to look at your growth and see, how much money you've made, how much you've lost, etc. So those things are really important. Another thing is when you first start off investing, don't invest something that you can't afford to lose, okay? Everybody does not always win in the stock market. Historically, you will generally, if you've picked, some good companies and invested in some good stocks, in the long term, you will win. One of the mistakes that a lot of people make is like, for example, when you hear about a GameStop or when you hear about a lot of these other companies, when they're up, everybody wants to go invest in them. And it's like, no, you've already missed the boat. You don't want to come in when they're at their highest peak. You want to invest when the stock market is down. So today, a lot of the stocks I invest in, and as Mark was saying, Apple dropped down to $120 a share today. So these are the type of buying opportunities that you want to take advantage of, because basically we look at that as the stocks being on sale. So when something is on sale, like when you're at the grocery store, you see something that's on sale, you want to go ahead and purchase it, okay? When it's really high up, that's when you look at selling off some of your earnings. Another good thing to do is in regards to your dividends is to go ahead and then reinvest those. It doesn't necessarily make sense a lot of times to shave off $200 or, 15 bucks or whatever the case may be. Even something as small as reinvesting your dividends can give you a lot of gains, a year, 2, 3 years from now. So those are just a few tidbits right there, but I would definitely advise you guys to take a look, at that course that I have on there. It's just got a lot of step-by-step information for setting up your portfolio and jumping into investing. What I want to do right now is just kind of open up the floor for Q&A. So if you guys want to go ahead and unmute your mics and any questions that you may have to ask, myself or Mark, I'll kind of let Mark answer the majority of them. But if any of you guys have any questions on the stock market or anything as it relates to investing, the floor is open. Mark is also really big on investing in real estate as well. So any questions in that arena, he's pretty proficient to answer those as well.
Hey everybody, it's Gina.
Hey Gina, how you doing?
I'm good. So my question is, so stocks like Apple or stocks that are on sale and, this being a good time to buy, what's the starting point? What's the recommended starting point as far as how much to put in, how much to buy, aside from what you can afford?
Okay. In regards to, let's say let's go back to foundation, I guess. In your budget, one thing that I recommend is people do a zero-based budget. I didn't get a chance to highlight that earlier. So I have a zero-based budget, and in that budget, I kind of tell my dollars exactly where to go. I know exactly how much I'm paying for my mortgage, my car payment, how much I have for leisure, how much I have for my electric, and then I also have my investment box as well. And that investment box could even be, starting a Roth IRA, I'm going to go to a financial advisor, make it a steady, permanent commitment. And it also can be money that you're looking for opportunity in terms of investing. So it's not really how much, it's just really putting it into your life and knowing that it's a factor that you're considering on a consistent basis for rare opportunities like today where Apple, Tesla is down. So let's say $100 would be a good starting point. So if you do that for 2-3 months and there's really no opportunity, the stock market is too high, it's not an opportunity. If the stock market is low because you've been paying attention to detail information, you're seeing that Apple is really what we call undervalued, then this would be a good opportunity for you to execute that money that you've already consistently saved. I like the financial advisor because you don't have access to it. So inside my Edward Jones, I have a money market account where I just send money consistently. I also have, money for college funds for the kids, and then I also have stocks that I buy consistently. And they call that dollar cost averaging, which is where you don't try to time the market, you just consistently invest in the stock market. And as the day goes up, day goes down, you pick up some good days, bad days, but historically you're still buying and you're still benefiting from what we call dividends. So a good start point would be a zero-based budget. Put a good figure that you think you can commit to. If it's $150, $200, as you start, you'll start noticing that it'll build really fast. And when you get, when you start to see returns, you start to see that you actually will put more into that investing box and cut out other areas so that you can continue to do what you're doing.
And so
yeah.
Go ahead, Gina.
No, I was just saying that's good. Thank you. Go ahead.
You're welcome.
And just to add to that, you always want to know what your discretionary income is. So discretionary income is how much money you have left over after you've paid your bills, and everything is that you have to pay, on a monthly or weekly basis. Then you have your discretionary income. What I generally do for myself is 50% of my discretionary income, half of that goes into savings and the other half goes into investing. Like Mark said, I like working with a financial advisor as well because I can practice what's called paying yourself first. So that money immediately comes out of my checking or savings account. It goes into my investment accounts. I don't get a debit card. I don't get a a checkbook or any of those things associated with it. So I don't necessarily have access to that money. So it's money that's building and growing over time that after a while, you kind of just not necessarily forget about it, but that isn't money that you look at when, you get in a bind or, you're thinking, hey, I want a new car, and I need to put down a down payment or whatever the case may be. So that's another way to look at it as well. Always have an idea of what your discretionary income is, and then you can kind of decide from there how much of that, you want to put into, your investments. Especially after you have, that good 3 to 6 months of savings already saved up. Mark, one of the things that you continue to talk about is undervalued stocks. And so you've mentioned Apple quite a bit. Are there any other recommendations that you want to throw out there to the mentees today?
Yes, there's a lot of stocks right now that are really discounted. One good way is on your watch list, you actually will have something called the 52-week high and the 52-week low. So kind of get familiar with some of the terminology, and then you'll start to notice some of the signals that tell you this is a good opportunity, even if you haven't, diligently watched the business, in a historic basis. Fiverr is a good stock. I like Fiverr, Fiver. This stock is, it went down a little bit today. This stock, I got into this stock because we own a website. We sell, I don't know if you know, we sell CMOS. It's a healthy health product. And when I built the website, I used Fiverr to hire people to do certain things that were not necessarily I was skillful at doing. So it's a big network of people that do videography, people that do website content, that create website information. And this stock came in as an IPO, which is an initial public offering, which is when the stock first comes out in the stock market about 1 year and 9 months ago. I bought it at $35 a share. This stock was at $330 just 2 weeks ago. And it's down right now. I think the stock is at $222. So it's way off its 52-week high. And I don't really see any external factors that's impacting the business model. I still think it's going to continue to take market share as people go from retail to online. Another stock is Square. Square is a big stock. It's a payment processing stock. Actually just partnered up with Jay-Z. I think Jay-Z is selling 50%, I think, of the business to Square. So I think this is going to continue to revolutionize its business model. It's a big supporter of small businesses. When you go into like a local business, if you think about transactions, what you're using to pay is usually the Square that people are using. So, and they actually have an integrated platform that can help businesses monitor inventory. So there's a lot of advantages to Square. It's undervalued as well. I think this stock is worth 280. And right now, I think the stock, if I'm not mistaken, I think it's 222 a share as well. I like Fiverr. I like Square. I like Adobe. Adobe is really undervalued. Adobe, if you think about PDF, you think about Microsoft Excel, you think about all those things that you need in regards to having a business and storing data and information. Adobe sells subscriptions, just like Netflix. So if you want to use their PDF, if you want to do photography, these individuals are paying on a monthly basis for a subscription model just to access Adobe's platform. And this stock was recently, if I'm not mistaken, I think over $400 a share. It's right now under, if I'm not mistaken, I think 343. I think it's 343 a share right now. Adobe. I also like Salesforce, CRM. It's down as well. Salesforce helps businesses integrate online. Meaning if you're an online small business, you don't have the security, you don't have the network, Salesforce helps them convert to an online platform. And there's a lot of stocks that are down right now. I would kind of go down the list, but some of the fan favorites for me would definitely be the ones I just highlighted. I also think Amazon's really undervalued right now. It's under $3,000 a share. It's usually $3,300, and it hasn't really had that kind of stellar year. So this would be a good opportunity to get in. Microsoft's a really, really good stock as well. It's a growth in income. It pays dividends. And this stock is worth way more. And it's the industry leader. When you're thinking about the cloud, you're thinking about security, because we're all going online. So if you're going online, you have to have a cloud service platform that protects your information and actually tells information what to do and how to actually optimize that information by using your user data to improve the business model and return of the businesses. So Microsoft's a good stock. There's just a lot. AMD is another good. It's AMD is very similar to NVIDIA. NVDA is industry leader in regards to semiconducting chips. And when I recommend investing, I also, make sure you have a balanced portfolio. So I don't have too much technology. You have to have some technology. You have to have some value, such as like Coca-Cola, stocks that give you dividends and also grow. You want some technology. You want some EV, which is electric vehicle, Tesla. Luminar Technologies is another stock that supports the electric vehicle technology platform as well. And you can kind of mutinize with smaller businesses that still benefit in the bigger platform, like what Tesla's doing. There's other businesses that are associated with Tesla's greatness. And you can invest in those stock prices as well. I'm still looking through the stock. There's a lot that's down today. I really want to just highlight the ones that I think would be ideal.
Any of them, Mark, that you see that you feel are good undervalued stocks that may be, $30 or less a share, for some of our beginning investors that may not want to put,
so much
a bunch of money in starting off?
For sure. I'm thinking a good, Plantar is a good stock. Palantir Technologies, PLTR. This stock was recently at $38 a share, $39 peak. It's now at $24.73. It has a lot of big time hedge fund, money coming in. It's a government entity that actually helps target and analyze people's movements and tracking. So it used to be connected to the government solely, but now it's in the open market, which means a bigger, access to different business models to continue their growth as well. So I think Plantar is a good stock, and this is $25. Another good stock is NIO, N-I-O. NIO is a Chinese company. It is similar to Tesla. And if you think about the total addressable market in China, it's over 1.5 billion people. So if NIO does even remotely decent, they're going to make a ton of money. And it's a really, really good stock that just took a real big hit. It recently released earnings on Tuesday it released earnings. It did good on the earnings, but right now with the sentiment of what Tesla is doing, it took a hit. And there's not any external threats to the business model. This stock was recently at, I think 52-week high was $60 a share. It's at $39 a share. So it's a $20 discount on this stock. And this stock just came out on the market. So it has not been around very long. It was just recently at $2, $3.72 on March 5th of 2020. And over a short amount of time, it's accelerated, just like Tesla. And I think in another year, if you buy this stock will be 2-3-fold higher. Any other industries at all you guys are kind of interested in? Because sometimes buying stocks is something you have to be passionate about as well. I like technology. I like Apple. I use Apple, so I'm really into Apple. But I also like healthcare stocks as well. United Healthcare is down as well. It's another big stock. It's not going anywhere. I like HCA stock. HCA is the #1 nationwide. I used to work for them. This stock was, I think, $36 a single share 3 years ago. It's $177 a share in 3 years. It jumped that much. Just to show you the power of time.
All right, any more questions, guys?
I got one question. So thanks, guys, for having us and educating as well. But what about financial advisors? So when you're looking for a financial advisor, how do they charge and how do they make money, like with a financial advisor?
Yes, most financial advisors, they do they charge a fee. It's evolved over time. Before it would be a flat fee. Now they charge based on the percentage of return. So they'll charge 1% of the total account on an annual basis. So I think right now I'm paying my financial advisor, I think like $40 every 2 months on average for all the accounts. So it's not a significant amount for the amount of value, patience, and direction he's provided over time for me. Because sometimes when I want to sell, he's telling me not to sell. Let's wait. I think the stock is worth more. And when you're doing it on day-to-day in Robinhood, you're seeing your stock go up and down. There's an emotional component to that forces you to more sell than hold. And over time, the longer I've held, the more, my account has grown. And I do think that having a financial advisor guide you through those dips, and also giving you support when you do have questions and you have concerns about selling helps as well. So the fee, I think, is something that I think forces our community to not even consider investing because they know they have to go pay for a financial advisor. When if you look around, a lot of those that are affluent, they all have financial advisors and they're willing to pay the fee because of the value of what they're getting from that financial advisor. So it's a great investment. I think it's an investment in yourself. And as your account grows, you'll notice a change in you as well, because now you're going to be looking for opportunities. When you go into Macy's and you don't see anybody in Macy's, you're going to see Macy's completely different. You may want to not consider that stock because you don't see the foot traffic that you're accustomed to. And, those are the cues that kind of let you know this is a good stock to be in because of what you're seeing on a day-to-day basis.
And so, Mark, for somebody that's looking to hire a financial advisor, what would be some good questions for them to ask somebody that they are potentially looking to hire to manage or help grow their portfolio?
I would say you want someone who has the heart of a teacher, someone who's willing to teach you, answer all your questions, have you understand. And my Edward Jones guy, he's a young guy as well, so we bounce off ideas, and sometimes I find good stocks that he likes. And if it makes him money, he'll recommend it to other investors as well. So someone who's willing to take the time out to teach you about the different stratosphere. We usually meet about twice a year, but I call him at least once a month, I would say, at least once a month. If I see a change in the market, if, recently I thought the market was too hot, so I went into bonds. I sold shares and I went into bonds to conserve capital. waiting for an opportunity, and the opportunity's here. So I called them again and said, when we have cash, let's sell the bonds, because bonds are up. When stocks are down, bonds typically go up. When bonds are down or suppressed, stocks typically go up. Stocks go the inverse, up. So we just, parked it, waited for the opportunity. Stocks went undervalued. We jumped right back in and we handpicked the ones that we thought were fan favorites. And someone that's accessible.
Yeah, definitely. Another thing that we hadn't really touched upon, and I know we don't have too much time, we got about 13 minutes left, but something for you guys to do your own research on, but mutual funds. Mutual funds are good as well, especially for people that are a little bit more on the conservative side, but don't want to be as conservative as bonds, but don't want to risk, as much as stocks. So mutual funds are comprised of several different stocks and bonds and things of that nature. And so on the course, you guys will find more information on mutual funds as well. So I know we talked a lot about stocks and a little bit about bonds, but mutual funds, are available as well. So definitely, take a look at those. Go ahead, Mark.
You can also create what we call ETFs in certain platforms where you kind of like take 10 stocks, you give them a percentage, and you invest all your money into that ETF. So if you like Amazon, you like Apple, you can create a little ETF, give it each its own individual percentage, and then you invest in that whole ETF, which is more of a balanced approach. But if you're going to do single stocks, I don't recommend you do more than 6 or 7. Just get 6, 7 good stocks that you know in and out, understand the model, and you continue to add as you go forward.
All right. Any more questions? So I guess y'all gonna get started investing tomorrow, huh? All right, guys. Well, if that's it, Mark, if you don't mind, just shout out your Instagram page, because I know you give a lot of good investment tips, each and every day, and I think that would be a good page for our mentees to follow.
All right, it's Rich and Wise at RICHANDWISE LLC. And I put a lot of content. I usually post a lot on my IG stories, just because the content sometimes can be a little bit overwhelming. So I'll even tell you what I'm buying, what I'm selling, what's undervalued for the week, and just kind of look for those gems, and then do your own due diligence. And if you have, disposable capital that you're willing to invest in, just start. I would say starting right now is a great opportunity to start, because I think things are really, really discounted. So as an average investor, novice investor, I think this is a great opportunity for you to start.
All right, guys. Well, if you don't have any more questions, we'll end our session. I'll be in touch with you all about our session for next week. I have started you all's credit repair. And so most of you guys will start getting some information in the mail within the next week or so. As far as your inquiries being removed, and more detailed information will come via your email address. All right. Well, everybody have a great night. And thanks again, Mark. We appreciate you coming on.
Appreciate it. All right.
All right.
Bye.
Bye.